NVDA, the chip dictator, the chip-tator, if you will. She controls the hottest industry right now, and if you're sleeping on her, you're sleeping on the rest of the market. This is a stock that no matter what kind of fear, uncertainty, or doubt that has been thrown at it, it just keeps rocketing. This stock has enjoyed the very rare phenomenon of being able to routinely add billions and billions, tens of billions to its market cap week after week after week for years. And to resurrect a meme from Charlie of 2023, NVIDIA has no peers, and everyone only focuses on her. She's the one that gets all of the eyes, and there's good reason for this. The reason is because she is the center point AI play. She's the purest way to get real AI exposure, but she's also a massive moneymaker in the here and now. NVIDIA has become one of the biggest companies in the world because of her ability to create and sell the highest performing GPUs used in gaming, AI, data centers, autonomous vehicles, and a host of other high computer processor demanding fields. But the question is she a good deal right now? And the answer is absolutely yes. This morning, she hit a new record high at $603 a share, so yeah, by that stretch, she's actually more expensive than she's ever been, but you know when she also looked like this? Well, pretty much every single record high she's hit throughout her history. On May 25th, 2023, we made our NVDA is unstoppable video and made our case to buy her, and since then, she's gone up another 53%. NVDA's growth potential is exponential, so even though she was certainly in the nosebleeds back then, well, she had a lot more to rally and continues to do so. And that's because just looking at the stock price is not a fair way to analyze a company. You have to ask yourself what bang you're getting for your buck. You can't compare NVDA stock price to where it was a year ago, 2 years ago, 10 years ago. You have to compare what you were getting for that stock price if you want to analyze whether or not it's a good deal. In terms of PE ratio, you're actually paying far less for NVDA's earnings than you have for most of the last year. And this can be even more misleading because if, and I'd argue when, NVDA beats expectations at earnings next month, well, this number is going to be adjusted even lower as it has been the last 2 times. Now, if you remember, I've made this case before back in August of 2023. We made our NVDA 210X video, and we spoke about how despite record high after record high, she continues to skyrocket because the AI sector has unlimited potential and investors let their minds go to the moon on it. But that a lot of people don't understand that there's actually also not just hype here, but real math behind the buying. And this is the real math here. Again, you have to follow not just the stock price, but what you're getting for every dollar you're putting in a stock. And at that time, earnings had just come out and her PE ratio dumped dramatically. She dumped to a PE ratio of 112. And so in that sense, even though NVDA was more expensive than ever from a stock price perspective, well, you were still getting way more bang for your buck than you had done previously. And today, even though we're at a new record high, this is a similar situation. And in fact, today you're getting even more bang for your buck at a PE ratio of about 78. And quite frankly, this should drop again after the next earnings that come out on February 21st, just next month. So when people say, no, NVDA is more expensive than ever, show them the PE ratio, show them a lot of the trends that you're seeing under NVDA. Does that mean that NVDA is not due to dip or breathe when overall markets stop capitalizing really good companies? No, it doesn't mean that. But it does mean that you gotta look at what you're paying for, because if you're getting more than you pay for, it's hard to say it's more expensive than ever. Now, obviously, the good deal searcher, cheap dude, cheap Charlie in me is saying, yeah, in an ideal world, we need a big dip to really accumulate. And I do believe that if there's a massive dip on NVDA, that is the best time to accumulate. But at the same time, as somebody that's covered NVDA for many, many years, I'd be careful endlessly waiting on this stock. Many people for years have waited and waited on NVDA to have a massive dip, and they are still waiting. And they will continue to wait until NVDA is at a price that doesn't have any justification. And then they'll go buying in guns blaring. And that is when everybody that bought it at a good price is like, okay, now it's time to take my profits. Now it's time to take my profits. That said, the stock, in my view, is going to be a top player for decades. So with that in mind, what is the play here? Well, you have a long-term play where you could buy shares, and you also have a medium-term play where you can trade off the current momentum that is here before you get the next dip cycle. If you want to play the record high momentum that is brewing right now, well, I'd look at the April 19th expiring 650 strike calls. Remember, if you have a small account, well, trading options can allow you to leverage your money far, far further than just straight up buying shares. For example, if you have, say, $3,000 to play NVDA, well, $3,000 buys you about 5 shares of NVDA stock. If you put that same $3,000 into options, though, you can buy these 650 calls, giving you the power to control 100 shares instead of just 5. Controlling 100 shares versus just 5 shares is a big difference if the momentum on NVDA continues. Keep in mind that NVDA is going to be a killer heading into the next 5-10 years and will in all likelihood be a massive killer in the coming months.